Welcome to Frax Check, your weekly Frax vibe check. I am your host, Capital K, and as always, I'm joined by our producer extraordinaire, Sam, and my co-host, DeFi Dave. This week, we also are joined by Jason and JD from PropFi to share a little bit about their proposal and their project, which will come after our regular programming. We'll be going straight to the source of the truth via checking the chain. But before we jump in, make sure you smash that subscribe button on our Flywheelpod YouTube and follow us at Flywheelpod on Twitter and Telegram. This week, guys, I call it the capital J, capital F, capital C, JFC week. You'll see what I mean. Actually, you guys may have already felt it. But let's begin with our regular programming, checking the peg. So we see here that the Frax got as low as 0.996 and with a high of $1 for the week of November 9th to the 14th. And obviously we can't just take a look at the static price. We got to go to the market and check how the swap is performing. And we always go to our trusty Frax BP, which obviously there's pain there as well, but I will share that when we get to the liquidity page. But now you see here, I took $100 million of Frax and I swapped it for USDC in this pool. And we received an exchange rate of 0.9912, which is a 80 bips decrease from last week. Granted, I mean, I'm still quite impressed given how much the liquidity has been drained out of the pool. But losing 80 bips in a $100 million swap is still $800,000. So pain. Moving forward, we have our collateralization percent. And just a reminder, this is the percent that represents the algorithmic, aka the FXS part that's used as collateral. And we see here that I only want to highlight the
Did you mean like 100 million before? Like you said 100,000, you meant 100 million, right?
100 million. Yeah, I want
to make that clear. 100 million, not 100,000. That would be real bad.
Yeah, it's real bad. No. Let me run it back. 100 million, swapping it, 80 bips. 800K, still paying, but okay. All right, moving on back to the collateralization percent here. And you see we're at 87.4%. This is the number of, this is the collateralization ratio for all outstanding Frax, aka the non-Frax protocol controlled Frax. Because remember, Frax as a protocol owns a ton of its own Frax to facilitate the liquidity. And Frax itself won't redeem the underlying collateral backing. So the real collateral ratio we got to monitor is the one for the outstanding Frax, meaning the other folks that are holding Frax that are not the Frax protocol itself. Following the collateralization percent, we have a decent percent, which stands for the decentralization percent. And this is the percent of the collateral that are decentralized. So think of your ETH and things of that nature. And we hit another ATL. And no, again, I'm not referring to Atlanta. I am talking about all-time low of 12.9%. This is an 8% drop from last week's Frax Check. Like I said, this is JFC, VVVV, much bear market vibes across the board when it comes to these two metrics. We want to see the collateralization ratio at the low 80s, and we want the decent percent at the high 30s. Okay, that's kind of where we want. So, quick summary, peg check strong, curve swap could be better, collateralization percent climbing there, and decent percent, we got a new all-time low, so we got to fix that. Next, we have our segment on a new segment on Frax ETH, and as always, we check the peg. So we see here that Frax ETH compared to ETH is at a 0.9990, which is only a 10 bips difference between Frax ETH and ETH. That's quite strong. And as always, we can't just take the sticker price tag for it. We got to go into the market and swap it. And I usually do about $1 million worth of ETH. That comes out to be 800 ETH. And to go from 800 Frax ETH to ETH, I know I messed up on the pool there, but 1 second, is 0.9956. I'm going to fix the slide later, but the swap rate is 0.9956, okay, to go $1 million worth of Frax ETH into ETH. And in my opinion, I think that's quite strong. That still represents a 42 bips difference coming out of there, and that's pretty damn good. Like, last week we saw the supply in the curve pool of about 42%. This week it decreased down to 38%. And let's see where is the remainder of those Frax ETH. We see that the count of Frax ETH is at 5979. So we increased by 12%. Just look at the verticalness of that graph, right? I think that graph is our saving grace for the week, because we know that it's going to keep on climbing up higher and higher once the flywheel turns on. And if you
November 17th, mark your calendars.
Exactly.
November 17th.
Mark your calendar. Why, Dave? Why, Dave? Why is November 17th?
Because that's when like the vote expires and the gauge will turn on, and then there will be a plethora of rewards going to the ETH, Frax ETH, curve, and convex pools. So, prepare.
Steady lads. Steady lads. All right. And then, as I said earlier, 38% is in the curve pool, whereas the remaining 62, well, they're hanging out in the Frax ETH staking contract, just waiting for that sweet native ETH reward. Very cool. Very cool. Now, I want to do a quick highlight here on the APRs. The APR of Frax ETH on Convex right now is about 8.5%, which is slightly above the native ETH staking yield. But as Dave said, on November 17th, that number is going to go buku up, because right now the Frax ETH pool is getting a tiny itsy bit of bribe from the Vodium, as I just checked earlier, like the smallest bribe you could think of just to get some juice going. But regardless, we'll do a quick summary check here. We have the peg check, strong, 10 bips is off. Curve swap, again, I will fix that. And the count is up only at 5,979 Frax ETH, and 62% of that is staked into the curve pool. I'm sorry, 62% of that is staked into the Frax ETH vault. Moving on, we have our AMO holdings. We down bad, guys. We're down bad. We are down 30% compared to last week's. It's a lot. It's like almost 140 million, 130 million that came out of the curve pool, about 10 million that came out of the liquidity, the curve AMO, 10 million came out of the liquidity AMO. It's just, liquidity just got zoop, like a vacuum straight up out of the AMOs. So pain, but we know that already. Moving forward, we have our profitability check. And here we are still down 740K for the month of November so far. So halfway through the month, we're down 740K. And I might say this month may be our first down month, guys. This month may be our first down month, given the way it's playing out right now. It just may be. Yeah. It just may be our first down month, but it's all right. I mean, these are bear market things, Yeah. We hung on as long as we could.
I would say if there's one silver lining in all this, I'm reminded of what Scoopy said at our interview a few weeks ago. How you need to make a stablecoin that can scale up, but equally and even more importantly, you need to make a stablecoin that can scale down as well. Yep. And even 30% is a lot, but the fact that Frax has built a machine that can scale down like that just makes it more robust, more lendy. It sucks. We probably won't be profitable this month, and I think we'll probably they'll probably give some ammo to people in the community, because I've talked to multiple people, not just Jack, who was on several weeks ago, but other people offline that maybe we shouldn't put all our eggs in one basket with curve and convex. It could definitely still be the Sarworth, but maybe look at Aura and Balancer, maybe look at Uniswap and Arrakis and whatnot. I think go seeing what options are there. Those are my initial thoughts when I saw the last slide.
Agreed. I think we definitely need to look at other revenue streams. Like any business, we should absolutely look at other opportunities where we could expand Frax product as a whole, and also obviously the profitability of the protocol as a whole. All right, now let's do a quick summary of our money check. So our AMO holdings down bad. We're at 423 million, which represents a 30% decrease relative to last week. And for the profitability check, we are currently down 740K. And if we're projecting at this same rate, I think we will have a first down month for the month of November, RIP. So moving on, we have my favorite section of the Frax Check, the liquidity check. And you guys remember the theme I said at the beginning of this Frax Check, what week it is? It is the
JFC.
JFC week. We are at 74% of the free pool.
Oh.
Hiya.
Pain.
That's what my aunties would say. Hiya. Sam, did you say something?
Yeah, I was just saying pain. Like we were
okay.
close, guys. Close.
Or we can't hear you.
Can't hear me?
Pain. That's
Pain.
That's how painful it was. Oh man, this is painful. I put that number in and I was like, no! It didn't even start with an 8. It started with a 7 this time. I'm like, Jesus, JFC. All right. Anyways, moving forward, I got to see what it looks like compared to everybody else, right? So we got to look at the Frax BP 3 pool and Frax 3 CRV. You see it here. Everybody is down across the board. From the Frax base pool, we lost about 37% of the liquidity, and that represented almost like $300 million worth of liquidity. And I believe the Frax base pool right now is at a fairly imbalance, with the majority of it being Frax, and it's going to get balanced very soon, shortly. It's about, I think, 25 to 75. So it's quite imbalanced right now. I think the Frax team is probably going to have to go in there and do some rebalancing. But anyways, moving on, we're going to take a look at the meta pools, right, guys? And remember, the meta pools are pools that are paired against the base pool. Example, like, LUSD and Frax BP. The base pool, the meta pools, also JFC. We're down 27% from the TVL of all the stables at 67.7 million. We're pretty much back to where we were like a month ago. So it kind of retrace. We pretty much retraced completely down to a month ago of excitement and pain. Thanks, SBF. That was awesome. And now, moving on, we also have remember, Frax base pool could be paired with non-stable assets as well. And we see this with pairs such as CVX FXS, CVX CRV, and also things like Badger and Frax BP. So if we take a look at those, our non-stable meta pool TVL is about 12.3 million. And the aggregate between the non-stables and stables pair gives us $80 million in TVL, which again is a 28% decrease from our previous Frax Check. So pain, yes. But hopefully next week we will resume some up-only action. As always, if any project out there are looking to get involved with the meta pool, please join the Flywheelpod Telegram chat and DM any of us, and then we'll talk about it and hopefully get you connected. So, summary time, liquidity check. We have our Frax base pool at 467 million at 74% of the 3 pool, pain. Then we have the meta pool currently at 67.7 million for the stable pairs and 80 million for TVL of all pairs. And the reason why we do this, lastly, is to make sure that the Frax supply could grow as big as possible. And this week we are down, as expected. We are at 1,179,000,000 Frax supply outstanding out there, which is a negative 3.6%. Or
I thought it was going to be more.
Decrease. I know. I really thought so too.
Yeah,
I was like,
it's huge.
Oh, okay, that's all right. That's all right.
And the fact that go ahead.
I was gonna say that the Frax base pool still needs to be reduced by like 200 mil. So the shoe is yet to drop, right? Yeah. So, all right. Well, I'm gonna hand it over now to DeFi Dave to kind of take us on.
Hey guys, I wanted to show something before we go over to Dave. You can hear me all right? Yeah.
Okay.
I found a really nice dashboard that I actually wanted to highlight in Dune before we go over and talk about governance stuff. So I was cruising around on Dune today, and I found this really nice dashboard. It's called Exponent Stablecoin Risk Diversification. And this essentially goes through and it looks at the peg for each of the major stablecoins over the past 9 months. So Frax actually performed the best. So Frax had the lowest deviation of its peg at 0.32% for the past 9 months, and that includes the recent FTX stuff. It also includes the Luna dump that happened as well too. And you can go down. I'm going to turn off LUSD here,
awesome.
And you can go down and you can see the dates and where the deviations were on the peg for the past 6 months. And then there's also some more kind of information here. But I just thought it was.
This is amazing.
I just thought it was interesting that like our peg deviation is lower than everybody else's, and that's probably by design and how we have the AMOs set up. Like nobody can compete in liquidity on Curve, and yeah, so this is going to be, I think, a big selling point going forward, as long as people have faith in Frax. So
Frax works and Frax is backed.
Exactly.
Yes.
Yeah.
Shout out to Paul.
Exponent.
That together.
Yeah.
Super cool. Super cool. Thanks for sharing, Sam.
Yeah.
Thanks, Sam. That's pretty cool. Now moving on to the governance roundup. This week was a very active week in governance. We have a number of proposals, and this week I wanted to get the PropFi guys on, who is I will say this, the first sponsored guest on to make their case for their proposal. PropFi, I would consider them a mix between BridgeFi and also real-world assets. I like to think of them as when I had a phone call with them a few days ago. It reminds me of a combination of like USDC and RETH, and like if DeFi and real-world assets is going to come on chain, it would be in this manner. It's just like trying to find the sweet spot. I'll let you guys take the floor. Jason, JD, thank you for coming on. Can you give us a little bit of background of PropFi, what it is, and what you guys are building?
Yeah, so I'll just take off the sort of the background here. I'll go into it. So PropFi originated actually about over a year ago, just sort of kicking around ideas with the rest of the team that are actually working on it now. Our other two founding members have a background in sort of like the regular fintech space, and they successfully started an online mortgage brokerage service that originated, by its height over $1 billion in mortgages. And so they kind of have this focus on the real estate space and sort of a feel for it. And they just kind of wanted to apply that knowledge and learning to the crypto space. And it kind of all was in the background. We were working on other stuff. And then post Luna, we realized, yields on chain started to dry up. You could only get, sub 1% on any of the major lending protocols, money markets, owing to the fact that people were just not really like taking out leverage to, lever up their trading positions as much as they used to. So we saw how like incorporating these real world assets could really like have a good product market fit and appeal to a lot of people that, have generated a lot of wealth on chain. And, it's difficult to move, huge amounts of money, from the on-chain environment to the real world. There's all kinds of irritating, like, legal things that come into play, and like the process is definitely not frictionless. Plus, there's just like a lot of people that want to retain most of their funds on chain. That's the kind of environment they're comfortable with. It's the environment where they've made most of their money. So we saw this could really like work if we were to find a way to bring sort of real world assets and allow investment within them to the on-chain investor without them having to go through the laborious process of offloading things to the real world themselves. And we specifically kind of initially thought about targeting some distinct real estate classes, and we definitely wanted to make sure that this was something that would be like regulatorily cleared and put forward in a way that everyone was 100% protected. And so it took many months of sifting and sorting and getting all kind of legal advice and clarification on that we needed, but we're finally ready to kind of like really push for this. So that's kind of just like the background and bringing up to speed where we are now, and we can get into more specifics. But yeah.
Yeah. So your proposal right here is FIP 125 exploratory partnership to pursue a PropFi WRA AMO. Can you give a quick summary of the proposal, and then we'll get into the comments a bit?
Yeah, I do want to let Jason chime in, if we have a moment to kind of go into like the specifics of, and I think it will make sense to have him step in, given his area of expertise around the property acquisition and management side of things and his background in that kind of area. But the higher level overview of what FIP 125 is we want to pursue sort of like an exploratory relationship where we, understanding that many within the Frax community are very sensitive about any kind of risky allocation of collateral or involvement of the protocol, because Frax is something very special and something that you guys have worked very hard to put in the position it's in today, and you don't want to jeopardize that. So, just as a bit of a background on this, I've known Sam for the Sam K for a little bit in this space, and I did go to him directly to kind of discuss whether this was even something that I should even attempt to do before this, and he suggested we make it sort of like an exploratory soft commit type of proposal where we could kind of tailor an AMO to something that would be within the confines of what the Frax community is comfortable with. The AMO is basically just greenlighting this kind of ongoing working relationship to come up with a allocation amount and terms that work for you guys when it comes to allocating some amount of collateral to the initial product line that PropFi is basically going to put forward when we're ready to launch pretty soon here. And I think that's kind of the most important thing to get into now.
Do you have an estimate of when you think you guys are going to launch?
So, I mean, the housing market is this is kind of, it would help to kind of explain what this is. Essentially, and Jason, I think this is kind of a good place for you to step in here. We are enabling people to directly, from an on-chain standpoint, allocate capital in very large amounts, potentially, at scale, basically, to initially single-family real estate. But we intend to, and I can get into the kind of like the timeline of what we want to do with this, but initially to single-family real estate to generate much higher yields than are available on-chain at the moment. This is not like a mortgage or a loan-based or credit-based thing. It's actual purchase of underlying real assets. There's no like risk of non-repayment or anything like that. It's purely like we are investing, sort of like equivalent to what you would do if you were in a high-yield, exclusive private equity REIT, real estate investment trust, but without lockup periods, with much greater liquidity, and able to be accessed directly from the on-chain environment without having to go through all the irritating registration processes that exist in the real world. Jason, would you kind of care to elaborate a bit on that?
Sure. I think if you take a quick step back and kind of think about some of the things that you guys were talking about earlier in the show, Frax is in a situation where you hold a tremendous amount of, regardless of what the last month's performance has been, you have a lot of assets. And there's a few organizations out there that have accumulated large treasuries, large collateral pools, what have you. And one of the real difficulties of large portfolio management is just having access to diversifying options within your portfolio to manage your risk and to manage your cash flows, to pay your people and keep the lights turned on. And so when we sort of zoomed out a little bit and looked at some organizations like Frax and said, okay, what are some of the challenges here? What are some of the solutions that we can bring to those types of problems? A very obvious one is something like single-family rental real estate, which is an asset class that has been used by large institutions for decades, increasingly so recently, and will probably continue to grow. And the reason it's used by them is the same reason that it would benefit an organization like Frax. What we're talking about here is we're talking about a geographically diversified portfolio of single-family rental homes that are purchased, renovated, rented, and managed at scale through existing TradFi partners of ours that are, prop tech, sort of fintech oriented, and capable of both acquiring and disposing of assets very quickly and at the kinds of levels that you would need for an organization like Frax. And the second thing sorry, go ahead, Dave.
No, you can say the second thing, and then I'll get into my last question.
Sure. The other thing too is, we want to be able to do this better than is done in TradFi. I think one of the things that we have seen is this kind of novelty of tokenizing things. And what we're trying to do is provide a very strategic institutional grade product here that not only is great for an organization like Frax on chain, but is actually better than what exists in TradFi today. So there's like a real value there, which we'd have to get into the level down details as to what makes it better. But we're trying to bring DeFi infrastructure to a kind of stodgy old asset class in real estate off chain, and actually create this sort of bridge of value as much as a bridge of asset or investment returns.
Bringing BridgeFi to bringing BridgeFi to DeFi. We in the comments we see like some support from Kiet. We have like a few people in the community that are concerned, just because I'm, as you mentioned earlier, like they're probably not familiar that this like isn't your standard loan or anything. This is more of a structured product. How would you like address with these concerns of, this is off chain, I'm not sure if we trust it. We should like not be exposing ourselves to off chain risk.
So let's think about two things that are in the comments there. One is the question of liquidity, which has come up not just in this proposal, but if you go back and read the past ones, there's a lot of liquidity concerns with real world assets. And then there's this idea of trust, and that issue is probably more prevalent now than it's ever been in the history of DeFi. On the trust side, what we're talking about is a fund of physically owned assets purchased for cash. And so the fund wholly owns the assets. We are working with two different audit firms so that we can actually create a complete look through. So we talked about doing it better than TradFi, and in DeFi, one of the ways you can do that is you can eliminate blind pool risk. You can effectively, like one example would be to NFT all the properties and then have all the NFTs visible in real time. So as you're buying and selling houses, not only can you see how much money is in there, you can actually see the addresses. You could go look up the homes. There's no other REITs where you can really do that in real time. So what we're trying to do is work with large audit firms, both on-chain and off-chain, to try and put together a custom solution that just eliminates this idea of like faith-based investing or like having to trust. And so we're aware of that as a problem. We were aware of it well before the events of last week, and so it's something that we're working on. On the liquidity side, this is an issue, and you can think of it of a few ways. One, Frax is never going to put 50% of its money into real-world assets. We're talking about a relatively small percentage of very stable, uncorrelated, low volatility, income-producing assets that are just going to help that portfolio weather some of these storms, but not put yourself in a situation where you're down to like your last 5% of liquidity and it's locked up in homes. Like you have a much bigger problem if that's kind of where you are. Secondly, we're talking about doing things at this sort of fund level and through SFR. One of the advantages of single family rental real estate is it's the most liquid form of real estate. And so through our institutional partners, and again, this would sort of get into the details a bit, being able to carve off homes and buy and sell them either in the market to other investors off chain or on chain gives us a lot of flexibility in terms of the types of the speed of liquidity that we can generate. And then there's some other things we're working with Frax on thinking about some other ways in which we can bring liquidity to the real world asset space.
Yeah, I think my favorite thing that you said is that you're trying to make this better than TradFi in a DeFi manner. I think that's super powerful, and I think that's really the only way that we can really bring the world on chain, especially the institutions who will be, let's be real, a lot more hesitant to go into DeFi. But having real yield, real yield again, with PropFi, with this potential Frax ammo is quite promising.
It's important to us to make sure that whatever we're building is kind of tailored toward organizations like yours. I mean, the purpose here is to be a force of stabilization for large collateral pools and large treasuries. One of the advantages of getting on board with you guys early on and some of the really good conversations that we've had is we're still in building mode, and now is a great time to be in building mode because the macro situation is bad. So build now when things are not good, so you can deploy when things are great. And we have some customizations. We're actually working, with you guys, and we're happy to do so in crafting a product that really works for you. We appreciate the partnership.
I
think it's all about building in a bear.
Yeah, for sure. The mantra of building the bear really kind of has proven itself to be true, at least for us. I think if there's just a small amount of time, I would like to actually add in something sort of as a little bonus item. We
got a bonus here.
Yeah. So there's always an issue of timing when it comes to a certain market like real estate. And so many of the questions we were asked is kind of revolve around when would you deploy fund assets to actually invest within real estate. Obviously, right at this exact moment is probably not the opportune time to do so, given the state of the real estate market. There are ways to formulate a product that is not just focused on one type of real world asset, and so that's kind of where both the short-term and long-term vision of PropFi kind of come in. We envision sort of long-term this becoming more of a decentralized platform where real-world asset providers in the real world can sort of meet up with their on-chain counterparts and essentially sort of like almost end up as a clearinghouse for people on-chain to find good, reputable, transparent real-world asset providers which they can invest in the products of from an on-chain perspective. That's sort of like the long-term vision we have for this. Very short-term, given that treasury yields are highly elevated beyond what we've experienced for the last 2 decades at least. We are working with designated partners to basically very rapidly deploy a treasury fund where you could basically just directly invest from an on-chain standpoint into highly yielding short-term U.S. treasuries. Pretty much the most pristine form of collateral that exists in the world. So in terms of a zero risk investment, it's pretty much as good as you can get. And I mean, the exact process of it is really quite simple, but I think, Jason, again, if you can quickly expand on exactly how that works, I think it would provide greater insight.
I think we're going to wrap up because we have to do the rest of the show. But I think that's the thing that I'm super excited about is the treasuries coming up, because that was like what our phone calls initially about, and there's all that talk with Maker, trying to get a deposit at Coinbase or Circle or something. But I think as a first partnership, if we can do that in a DeFi native manner, that's super cool.
Absolutely.
Yeah.
For sure.
Thanks, guys. Thanks, guys, for coming on. And right now, this proposal is on Snapshot, so make sure you vote for it. I think this was super informative, and I think this is a super cool product. And I want to reiterate, they want to do this better than TradFi, and they want Frax to be a founding ground floor partner. I think that's super powerful.
Awesome. Thanks, guys. Really appreciate the time.
Thanks, guys.
Thanks.
Have a good one.
Sweet. Cool. Now to the governance around. That was pretty cool. Thanks
awesome.
for coming on. Yeah, this is what I like. If there's something that happened that will kick off the next cycle, this 2020 to 2022 was the cycle of the experimentation, the Ponzi-nomics, this and that. I think the next cycle is when actual yield gets figured out and comes on chain, and PropFi is definitely at the forefront of that.
Agreed. I mean, what got me really excited was their treasury bit. That was That's cool. I would love that kind of product, and they will be basically the floor yield, on DeFi.
Yeah. What do you think, Sam?
I'm up in the air still. We've had a couple of real world asset proposals before. Like I really like the centrifuge one, and there was a couple of other ones that we had on as well too. So, what would be the difference about working with PropFi versus the other previous ones that came and didn't find success in getting passed? Because I think at the end of the day, the question is about like treasury funds, right? Like if maintaining the peg is the thing that matters most of all, when you start to diversify out the treasury into these more liquid assets, it could bring questions into.
I'd imagine like there'd be a pair between. Yeah, I'd imagine there'd be a pair between like the treasury asset that's on chain and Frax, and so like just having more liquidity would just help the pair.
I wonder if you could set it up as a Fraxland pair, right? Or does it have to be like a fixed term?
Yeah.
It's got to be a fixed term thing, right?
It can be a Fraxland pair. Yeah, I don't. Yeah,
it seems interesting where
I
it
don't
could
see
be
why
like.
not.
I mean, I don't know if this is buildable in the Fraxland, but essentially, you could just build a Fraxland pair where you deposit Frax, and you get back their token, right? Maybe there's a lock or something on it, and then they pay out the interest on whatever that Frax is. We'll see.
Exciting stuff. And definitely supporters of the show, definitely supporters of Frax. Make sure you go vote. So that's FIP 125, the exploratory partnership to pursue a PropFi AMO. Next up, we have FIP 124, which is to authorize a Fraxland AMO for a new pair Geom. This was authored by Mark 11, an OG Fraxland who's been there since the start. The proposal, I just want to reiterate, is an anticipation for the Geom pair once that oracle gets figured out. Right now, it will authorize 5 million Frax for the AMO, currently up for snapshot, 688,000 for 1.5 thousand against right now. After that, we have a busy week coming up, so I'm gonna go through this as quickly as I can. The core team was busy with a lot of Frax, increasing the Fraxland's AMO. So Frax is still working, heads down shipping. You love to see it. FIP 126 coming up. Authorize a Fraxland AMO for a new pair, FPIS, which is your proposal, Sam. This is to authorize up to 500K Frax for the. Yeah, right now, 584,000 for, 402,000 against. So, I don't see why not. I mean, add utility to FPS.
I'm gonna go have a chat with Westwood. Westwood's voting against him.
Westwood. Yeah. Next up, we have the first Fraxland gauge with FIP 127. So this would be a gauge for the FXS Frax pair. This is authored by Hamid, who is an early Fraxless Frax advisor. This is create a gauge to promote liquidity for the pair to allow users to leverage their FX house without the need of selling it. It's up for snapshot right now. It's 435,000 for, 333 against. I say a lot of these proposals I've noticed they're still being decided, and I'm sure in a few days and especially when we do FraxCheck next week, we'll see which ones pass and which ones don't. Moving on, we have FIP 128, which is to increase the Fraxland AMO pair for the CRV Frax pair. This was authored by the Frax core team. This is to increase the AMO allocation from 5 million to 15 million Frax. Currently up for snapshot, 3.5 thousand for and 0 against. Next up, we have the Fraxland AMO allocation to increase the FPI Frax rate. This is authored by the Frax core team. Increase the AMO allocation from 5 million to 15 million Frax. This is just still being discussed, not to snapshot just yet, but we will be on that next week. Next up, we have FIP 129, increased Fraxland AMO allocation for the CVX Frax pair. This was authored by the Frax core team, and this one is to increase the AMO allocation from 5 million to 10 million Frax. We have this up for snapshot with 300,000 for, 0 against. After that, we have FIP 130, which is increase the Fraxland AMO allocation for the WETH Frax pair. I'm still waiting for the Fraxeth Frax pair, but we'll have WETH in the meantime. This was authored by the Frax core team. Increased the AMO allocation from 5 million to 10 million Frax. Up for snapshot, 300,000 for, 0 against. Also really looking forward to the S-Fraxy fixed rate pair. I think that would be like a very cool experiment in the future once that is ready. Next up, we have FIP 131, which is to increase the Frax-led AMO allocation for the WBTC Frax pair, authored by the Frax core team. Increase the AMO allocation from 5 million to 10 million Frax. Up for snapshot, we have 300,000 for, 0 against. And then FIP 132, we have deploy Frax Ferry to a new chain, Moonbeam. Frax Ferry. So Frax Ferry is live, and this is a proposal to get everyone all board to safety to the ETH main chain. I'm not sure if you guys have seen the docs for Frax Ferry, but I really like it because it's just super simple, and I love the language that they use. It's like there's like a captain and there's crewmates and everything. It's a slow, safe bridge, and that's how they built it. So that is up for discussion right now, and I encourage everyone to read the Frax Ferry docs. Super simple, a lot easier to take in. And then last but not least, we have FIP 133, which was just added today, to add the Xi Frax BP gauge. Now, Xi is the Silo stablecoin, and this was authored by Tencent, and this is to add the gauge for the Silo stablecoin. I'm not sure if you guys remember, but there's like a little bit of like hoopla and discussion because Silo, they originally paired their stablecoin to the 3-curve pool, and everyone's like, wait, what the fuck? Like, why didn't they pair to Frax BP? And it seemed like there was just a miscommunication. So I'm happy to see this figured out, and I expect this pool to pass. And yeah, that's it. Very busy week in governance. Frax core team pumping out proposals. You like to see it. You like to see Fraxland scaling up, because at the end of the day, this is how you get the decentralization ratio up, and it's how you get Frax supply to increase. So baby steps. It was a tough week on the FraxCheck part, but it's people care. People care. We have PropFi on giving their whole spiel about their proposal, which I think is super cool. And then Frax team busy writing proposals and community members. So you love to see it.
Yep, community strong.
Community strong. Peg strong. Yeah.
Do we have any,
thank you everyone for watching.
But before we head out, was there any update on the Alchemex vote? Like, did that vote pass for them to switch over to the base pool?
Yeah, let me check.
Or did they? Is it still still going? Because
I think it was in discussion. I feel like I feel like we would hear about it because it was just like a temp check, the original proposal, so it wasn't like an actual proposal itself. But
okay, so they're not actually
that's a good question. I wonder. Yeah.
Yeah, we'll follow up with. Yeah, we need to start. Yeah, we'll follow up for the next Frax Check and get an update from Scoopy about that.
Yeah, we can just we can ask him. But thank you everyone for joining us for this week's Frax Check. If you like what you're hearing, let us know in the comments. Don't forget to give us a like, subscribe, hit that bell button.
Here we go. Frax base pool AMO and ALUST collateral. It got 99% passed. That's good.
Oh, it passed.
It passed 4.
Oh wait, it passed.
The temp check passed.
Yep,
the temp check passed. So that's good.
Okay,
the
temp check passed.
Yeah. So that'll be what?
Passed last
Maybe
2 days ago.
That'll be 50 million coming over from ALUST. Good news.
I think it's 150. Their pool is
wow,
large. I remember. Yeah.
That's turbo mooning the Frax base pool.
Yeah.
Let's go. Help with those numbers. You got to get up those numbers. We can pump up those numbers.
Those are rookie numbers.
Yeah.
Pump those up.
Rookie numbers. Yeah. If you want to make sure you keep up with every Frax Check, the progress of Frax, what we're up to, what we're building, please hit that bell button. Comment, like, subscribe on YouTube. Don't forget to follow us on Twitter at Flywheelpod. Join our Telegram group at Flywheelpod. You can follow me on Twitter at DeFi Dave 22.
You can follow me on Twitter at 0xcapital_K.
And I'm at traders_insight.
And we'll see you next week. Peace.
Peace.
Peace.